Okay, so let's dive into this. We've got this collection of sources in front of us, notes, articles, some research, and they're all really zeroing in on stablecoins.
Right.
Now, if you only think of stablecoins in terms of, crypto trading and maybe volatility scares, well, get ready.
Yeah.
Our mission here really is to unpack what these sources actually tell us about stablecoins right now and where they might be going.
Are they just a crypto thing? Or something more?
Exactly. Is it just niche, or could it be, well, like one source hints, maybe something near an iPhone moment for digital money? And talking about transaction volumes that apparently rival the big global payment players, let's find out.
Yeah, and what's really fascinating, I think, is how these sources, when you put them together, they sort of shift the whole conversation.
How so?
Well, they're not just talking about stablecoins as, like, another crypto asset.
Right.
They're framing them as potentially the foundational plumbing for digital money itself.
Right, like that quote you flagged from Circle's CEO, Jeremy Allaire, talking about maybe getting close to that iPhone moment for programmable digital dollars.
He calls them the highest utility form of money ever created, which is quite a statement.
It is, and that word programmable seems really important here, doesn't it?
Oh, absolutely key. There's another piece, I think, from A16's Crypto that really digs into how stablecoins can lower the costs, both fixed and marginal, of building fintech apps.
Okay.
And this isn't just theory, it's about enabling more competition. The source argues that could mean, well, better prices, better user experiences, and much wider access for people.
So giving developers tools to weave money into software in new ways.
Exactly, making money itself kind of programmable.
Okay, so it's not just stability, it's what you can do with it digitally. And maybe because of that potential and the cost savings you mentioned, it looks like some pretty major players outside of pure crypto are starting to pay attention. The sources mentioned reports about Walmart and Amazon.
Yeah, exploring the idea of launching their own dollar-backed stablecoins.
Which kind of begs the question the sources touch on, why would companies that big be interested?
Well, it seems to tie right back to potentially slashing transaction fees compared to, say, credit card networks.
Right.
Or streamlining how payments flow, maybe even creating new digital loyalty programs using a stable digital currency they, control or at least leverage.
Makes sense. And it seems it's not just thinking about it either. We saw in the materials that Shopify.
Yeah, the huge e-commerce platform.
They've confirmed plans to actually integrate Circle's USDC stablecoin for payments, aiming for, end of next year?
That's what it said. That feels like a pretty concrete step from a big mainstream company.
It really does.
And if you connect that to the broader vision here, some people highlighted in the sources see this kind of adoption by mainstream companies as the real path to getting mass adoption for digital assets.
How mass are we talking?
Well, one data scientist quoted, again from A16Z's Crypto, forecast that stablecoins could be the first credible chance to bring 1 billion people into the crypto world.
1 billion. Wow. That's a huge number. What makes them so confident stablecoins are the key?
Well, look at the transaction volumes. That's something highlighted across these sources.
Oh, yeah.
Over just the last 12 months, stablecoins apparently processed something like $33 trillion in transaction volume.
Wait, $33 trillion? Seriously?
Trillion, yeah.
Wow. Okay, put that in context for us. How does that compare to, regular finance?
Oh, and this is the part that really makes you stop and think. The source notes that $33 trillion, that's nearly 20 times what PayPal handled in the same time frame.
20 times PayPal.
Yeah, and almost 3 times the volume of Visa. And it's actually getting pretty close to the total volume handled by ACH in the U.S.
ACH,
Right.
like bank-to-bank transfers.
The main system for it, yeah. So, this isn't some tiny niche activity anymore. These numbers suggest stablecoins are already operating at like a global payments infrastructure scale.
That volume figure alone, it really forces you to rethink their place, doesn't it? It's clearly way beyond just being a tool for crypto traders if it's nearing ACH levels.
Absolutely.
And looking at the companies behind this volume and this vision, the sources also covered how players like Circle and Tether are tackling the market differently.
Right. You see Circle deciding to go public. And the sources noted a pretty strong initial market reaction to that, suggesting investors felt pretty confident in their approach, their compliance efforts.
Okay.
Meanwhile, Tether, which is the biggest issuer, stated in these materials they have no plans to go public. They're taking a different route, operationally and maybe regulatory-wise.
So different strategies emerging as the market grows up.
Exactly. Shows it's a dynamic space.
Okay, so let's try and wrap this up. What does this all mean for you listening? I mean, these sources together, they paint a picture of stablecoins evolving really fast, right?
Moving beyond just crypto trading.
Yeah, way beyond. This vision of programmable digital dollars, it seems to be getting real traction. It's fueled by potential cost savings, better access.
And that's attracting serious interest, even action, from huge companies like Walmart, Amazon, Shopify.
And then there's that staggering volume, $33 trillion in the last year. I mean, that's dwarfing PayPal, challenging Visa, nearing ACH. It suggests they're already a massive, maybe even underestimated force in digital payments.
Yeah, plus the different paths being taken by leaders like Circle and Tether show the market's actively finding its shape.
So, taken together, it really suggests stablecoins are moving into the mainstream. They could genuinely change how digital money and commerce works for all of us.
And potentially much sooner than a lot of people might think.
Right. So here's a final thought, something for you to mull over. If stablecoin volumes are already this huge, challenging traditional payment systems, and big household name companies are actively exploring them for everyday commerce, how might this reshape digital money and buying things in your daily life? And could it happen sooner than you expect?